$300 silver, it sounds crazy. And there's a lot of people out there who throw out these crazy sensational claims because it gets a lot of clicks and it gets a lot of attention. And there's really not much backing or logic to, they just make up these numbers. And I really don't like to mention these numbers because I don't want to get lumped in with those folks. But $300 silver around the year 2026 would simply be the average of the previous two bull markets. So it's just an average. And to suggest $300 silver would be a muted replay of the 1970s run. It would actually be a downplay. And to be honest with you, if we're being honest, I think we're going to see an amplified replay of that. I think all the problems we're facing now are much worse than the 70s and the run from 1999 to 2011. So how do I get to that number? It's just an average of the previous two bull markets. And we can talk more about that if you want. If you measure it that way, that projects $300 silver on the low end. That's using a 50-to-1 gold to silver ratio. I think that ratio is going to be much lower than that. It's actually been a monetary metal longer than gold, believe it or not. And going back in history, I like to study the Bible too. And, silver is always mentioned before gold, silver and gold. Literally in a lot of languages, the word silver is money. They're synonymous. So I don't think silver is ever going to lose its monetary role. However, I do believe that silver will go into a speculative mania, much like Bitcoin and the cryptocurrencies. That's why I track those markets so closely. So I think silver is ripe for a speculative mania and a blow off top, followed by a massive pullback. That's why I'll be scaling, from silver to gold as that ratio compresses. But I do think so. And it's ripe. It's got all the things that made Bitcoin this, go parabolic. Silver carries all of those properties. It's finite. It's money. It's a global commodity that's outside of the banking system. And there's no replacement for it. So it's just ripe for a speculative mania. If just a very small percentage of the population said, hey, I just want a little bit of silver, good luck getting it. I like to think that gold is for long-term wealth preservation, but silver would be for transactions, throughout history, because it's a little bit more plentiful. It's about, 9 or 10 times more plentiful in the Earth's crust. So, it's more liquid and more practical for everyday transactions. Now, I'm not saying we're going to go back to transacting in silver, but just historically speaking, I think that's probably one. Yeah, it really is bizarre. I mean, I remember looking at the gold to silver ratio when it got around 85 to 90, saying, wow, this is crazy, and I actually started selling a little bit of gold for silver. And then that ratio went to 123 to 1 in March of last year. In all of history, I don't think we've ever seen that, ever. Now, so that's a historic anomaly. I actually sold almost all of my gold to buy silver and silver miners during that period. So why that happened? I think probably one obvious answer is banker manipulation. So that's one reason. And then another thing to note with that gold silver ratio that we're looking at the paper ratio. So, back when silver fell to $12 in March of 2020, you couldn't get any physical metal for that price. You're paying $15, $16 an ounce or more, probably actually a little more. So the real ratio was a little bit lower than that. Yeah, and those are fair questions, and a lot of people don't want to invest in silver because it's obviously a manipulated market. And what do you want to invest in something that's manipulated for? And one comment you said there is, will gold ever rise to its full value? To steal a Mike Maloney quote, he says that throughout all of human history, gold and silver always do a full accounting for the expansion of debt-based fiat currency, 100% of the time. So it's a cycle. He calls it the 7 stages of empire. And part of this final phase here is, governments just inflate everything away, trying to appease the populace. And then eventually gold does a full accounting for that. So will this time be different? I highly, highly doubt it. And then silver, you can manipulate paper assets theoretically in perpetuity, but silver is a physical asset. It's used in industry. Wait till Samsung and General Electric and Tesla and all these big companies, sense that actual supply shortage. That eventually, if this continues, you'll be pitting industry against these banks, which will inevitably result in true price discovery. Back in 1980, they created all this currency, right? I don't know the numbers, but you would take a nation's currency supply, divide it by the nation's gold holdings, and that ends up being the price of gold. And if you did that arithmetic back in 1980, that number came out to 850, which was the exact price that gold peaked at. And you could do the same thing back in 1933 when they revalued gold higher. Take the currency supply divided by the total gold holdings, and there's your number, roughly $35 an ounce. You can go back throughout all of history and do that for different countries, different civilizations, going back millennia.
One question that I've wondered about in my head is we see, China, Russia, Turkey, the list is pretty endless of countries that are either buying a lot of gold or trying to repatriate it from a certain location. And yeah, it's pretty obvious that they're buying a lot of it while the price is down. But I wonder about silver, especially with China, because China, supposedly has 400 million pounds of uranium reserves, as well. They are buying, copper mines and all these mines all over Africa. How do you think they view silver?
Well, it's a small market, so it doesn't make as much sense for them to put it on their balance sheet as like, a reserve asset like it does gold. But, as a strategic metal that's used in industry and, this electrification trend, yeah, they're going to want to secure as much future supply as they possibly can. And we see China doing that now. And it's not out of the question either that countries do begin accumulating physical as a reserve holding as well. It's a smaller market, so it doesn't make as much sense for them to do that. Oh, it can certainly move without gold, and we're already seeing a little bit, some early signs of that with the silver squeeze movement. We saw silver really rocket higher in the beginning of February, and of course, they came in and crushed price, even as demand was going through the roof and supply isn't increasing, which makes no sense at all for price to fall in that environment. But we saw silver start to rise while gold really hadn't done much. In fact, in the last year, silver has outperformed gold by almost a factor of 2, as that gold-silver ratio came down from like 123 down to a low of like 65. So that's almost half. So I think we're already starting to see that.
And where's that ratio at right now?
Roughly 67, 68, something like that.
And where do you think it can go?
Historically, at bull market peaks, that ratio peaks about 15 to 1. That's where it peaked in 1980. That's where it was in about 1933 when they revalued gold. And that's a good historic number to look for. And another number to look for is silver is pulled out of the ground at a ratio of roughly 8 to 1. So there's it's roughly 18 times more plentiful in the ground. So I'm looking for at least, 15 to 1 gold silver ratio. Now, that doesn't mean I'm going to hold all my silver until then, because, that could be a very quick event and then it comes back down. I look at industrial demand for silver as a tailwind. However, it's not like my primary investment thesis, because you can kind of model out the industrial demand and future growth and all this, and you can kind of account for that. But what investors and the market can't really account for is that change in psychological shift when all of a sudden, a certain small percentage of the population wants to get some silver. That's what's going to throw the whole supply-demand equation way out of whack that will need to be resolved with higher prices.